Mold-Tek, that's the company in focus. It's been hit by rising crude prices, increase from high margin, and the IML category improved products as well is going to aid margins for them. So let's chat about that with Mr. J.L. Rao, CMD at Mold-Tek Technologies. Mr. Rao, morning. We've seen an upward movement in crude prices, which would naturally hit your prices as well, as we understand. What's the impact that you've seen in your overall RMC costs?
Raw material is going up in recent few months, and it has no impact on our operations or profitability because we have monthly raw material price rollover. Wherever the price goes up, the prices will be revised upwards. Similarly, when the prices come down, we provide the same discounts to our clients.
Right. And how soon do you, usually pass on the price changes to your customers, and what's been the extent of the lag?
The raw material price of Reliance is known to everybody, so we pass on the price increase on a monthly basis, and the clients also do their calculations. So nothing much beyond the pricing of raw material we could do. But while pricing our product at the beginning itself, we'll make sure our EBITDA margins are protected. So periodically we seek rise in the other conversion costs also, like power, labor and other consumables.
Okay. We understand that you have a monthly raw material adjustment policy as well. Is that true?
Yeah, Reliance announces monthly prices of polymers in the beginning of every month, and sometimes they revise even in the middle. So every month, at the end of the month, if the price has gone up by 3 rupees and the weight of the container is 1 kg, we will increase the price by 3 rupees and the client will accept it. Similarly, if the price comes down 2 rupees per kg of a product, we reduce the overall price by same amount. So that way we pass on the raw material pricing on every first of the month.
What's the average EBITDA per kg that you believe you'll be able to clock in, and how much does that differ in your IML food products versus others?
See, because of the IML, we are in a position to attract better margins and higher pricing, because IML offers a premium look to the packaging and also gives them a completely tamper-evident and also contamination-free containers, which they won't get unless they go for a very high-end clean room facilities. So these costs are built up, which enable us to enhance our overall EBITDA through increasing sale of IML products.
Okay, so what is the average EBITDA per kg that you believe you will be able to clock in?
If you notice, for the last 5 years, starting from 20 rupees per kg overall EBITDA, I'm talking in weight because I want to nullify the raw material variation, price variation. So per kg EBITDA was 20 rupees in 2014, has gone up to 25, 28, and now at 33 rupees in 5 years. So from 20 rupees per kg, we are able to get around 33 rupees per kg for our entire average products. So we hope it will continue to improve a little bit further and further as we increase our sales in food and FMCG sector, where 100% of products are IML. If you notice, last year IML was just food and FMCG was just 6% to 6.5% of our overall sales, has shot up to 18% in the last financial year ending March 31st. So that has shown a significant increase in our per kg overall EBITDA from 28 point something to 33.4. So going forward, we have more and more projects and plans to expand our food and FMCG sales, which should augur well for our improved margins.
Okay, so what is the overall contribution from food and FMCG and from IML to overall revenues, and what do you want this to increase to?
Yeah, it is 18% now. In the year 17-18, we closed it at 18%, up from 6.5% the year before, and we are hoping to cross 22 to 25% during the current financial year 18-19, and that should gradually go up further in the coming years.
Okay. The concerning point though, Mr. Rao, is the slow ramp up of your RAK facility. The same still hasn't reached even the break-even point. By when can we expect profitability from this plant?
See, one of the reasons for a delayed break-even in RAK was the product mix what we anticipated did not happen. The bigger size products for paint and lubricants could not find takers, mainly because they are still using tin. So we thought there will be immediate demand for plastic pails, but there is some resistance to shift to plastics, and that resistance seems to take a little longer time. But whereas our capacities that are created for food and FMCG, for the dairies and local FMCG companies are fast filling. So there is a delay in BEP to reach BEP, but I hope this full year, that is year 1920, 18-19, would be a break-even year for us. Though in the beginning we may be still losing some money, from October, November onwards, we should be in the positive territory, and we hope to close the financial year as a break-even in RAK.
Okay, Mr. Rao, we'll leave it at that. Thanks so much for taking the time out and joining us today.